Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 21st of the 6th to Friday the 25th of the 6th, 2021. Basically, we're looking at the flows throughout this week, so over the period. Euro dollar plus 75, so that means over that period the euro dollar as an FX pair gained 75 pips or points. Euro yen plus 152, euro pound plus 19, pound dollar plus 67, pound yen plus 142, and dollar yen plus 53. If you put that into the model, the basic model, you get the yen as the negative opposed driver at minus 347, front and back door flows mainly going into the euro at plus 246, into the pound at plus 190, and the dollar is the negative rock at minus 89. Activity plus or minus 436. So over the week then we had yen weakness driving, we had the opposing positive flows mainly going into the euro and the pound, and backdoor negative flows going out of the dollar at minus 89. So we're going to stop it there and write up the daily flows, so don't go away. Right, welcome back. We've written up the daily flows, we'll rattle through them and then we'll stop it and write up the other data. Anyway, here we go then. So Monday the 21st of the 6th, we had a positive opposed driver in the pound at plus 280, front and back door flows mainly coming out the yen minus 209, out the dollar minus 172, and the euro was a positive rock at plus 101, activity plus or minus 381. Tuesday the 22nd then, we had a negative opposed driver in the yen, minus 167, front and back door flows, mainly going into the euro at plus 93, into the pound at plus 75, and the dollar was a negative rock at minus 1, activity plus or minus 168. Wednesday then, negative driver in the yen opposed, minus 121, front and back door flows mainly going into the pound at plus 93, into the dollar at plus 30, and the euro was the negative rock at minus 2, activity plus or minus 123. Thursday, a negative unopposed driver in the pound at minus 127, no backdoor flows, the opposing positive flows mainly going into the yen plus 72, euro plus 29, and the dollar at plus 26 was the positive rock, activity plus or minus 127. Finally Friday then, got a negative unopposed driver in the pound again at minus 143, no backdoor flows, the opposing positive flows going into the yen at plus 90, into the dollar plus 30, and the euro was the positive rock at plus 23, activity plus or minus 143. Right, stop it there and do the other analysis for the asset classes. Don't go away. Right, we're back again. Right, just to remind you then, for the weekly flows we had a negative opposed driver on the yen at minus 347, front and back door flows mainly going into the euro at plus 246, into the pound at plus 190, and the dollar was the negative rock at minus 89. So we had yen weakness, euro and pound strength, and dollar weakness over the week. Right, so we've written up the asset classes over the week. So the US dollar index then, it's operating at 91.77. It's 0.29 from the high, so it's come off a little bit, but it's still quite strong, the dollar. Gold then, not liking it particularly, it's 0.42 from the floor. Oil's had a massive ramp up, but it's now 0.5 from plus 0.5 from the model breakouts. Right, Wall Street has come up a bit, but it's still not at the old high. It's 0.20 from the high. S&P on the other hand has broken the high. It's 0.17 above the modelled high, and the tech is 0.22 above the modelled high. US 10-year then, so we've had this, this is the price, so it's been yo-yoing up and down. It's now, price has come off a little bit. It's 0.29 from the floor, but it's so yields are relatively strong in the US, and the Bund, which is the European equivalent, is about half marks, 0.50 from the modelled high or floor. So relatively speaking, US yields are in the short term stronger than European yields, and we've been seeing this reflected through the euro dollar and US index generally. Right, so what else we've got? Copper. Copper has been soft. It's now 0.25 from the floor. There's been a bit of talk about China's manipulation. It's sort of selling off some of its national stockpile to keep prices low. Who knows? US steel is still soft, but it's come up a little bit, 0.33 from the floor. Is obviously get a good bounce if we get this infrastructure bill through, right, in the US. Right, so let's just get rid of this. Our trades have deteriorated. We're about plus 1300 from a peak of 6,500. That was a while ago. That was about 5 weeks ago. They've deteriorated this week, it's fair to say. So what's happening then? So we're short USD dollar against the euro, the pound, and the AUD, and we're short NZD against the euro, the pound, the CAD, and the AUD, and we're about plus 1300 points profit from a peak of 6.5k. Right, so we're obviously short in the USD. The USD's been strong, so that's not helpful on this side of the equation. We're short in the NZD. The NZD's been strong as well, so not helpful either. The pound's been weak, euro's been weak, and the Australian dollar, whilst it's had a good data cycle and good print, the market is playing the commodities in terms of the New Zealand strength rather than the AUD strength. That may well not continue. What have we got coming up next week? Well, we've got NFP week on the Friday. Monday the 28th is basically a light day today. Tuesday we've got German CPI. Wednesday we've got China's manufacturing and non-manufacturing PMIs. So if they are trying to hold the price of copper down, that should be reflected in relatively soft PMIs. We've got on Wednesday still we've got GBP GDP, and Thursday we've got AUD trade balance, which is going to be quite important for us, and US manufacturing PMI. And Friday we've got German retail sales and the NFP report. So quite a lot going on, apart from Monday, of course. Right. So what do we think is going to happen? Well, things are getting quite compressed in the market. If you look at the asset classes and the flows, the dollar's sort of stubbornly keeping its strength at the moment. And it's likely as we run into the NFP, and obviously we've got a lot of data out, so depending on the inflation data and so on, it will knock it about, but that's noise generation rather than modelled generation. So it's likely the AUD will stay under pressure probably. The pound is likely to stay under pressure. And the euro as well. So we're going to get a continuation probably, and then you're going to get this nearer the NFP. You're going to get the market taking its foot off the pedal and reversing some of these flows. The CAD hasn't really benefited that much from this oil pump yet. It could do. Right, so that's where we are. We're going to carry on with our positions. We added to euro dollar yesterday. It started to go with us, now it's come back a little bit, but hey, that's trading. So we're sticking with those positions. Regarding tomorrow, we'll be putting out the data cycle review, which will fill in some of the gaps. And obviously Monday we're back into the market review. So thanks for watching. Try and catch the data cycle review. If not, see you Monday. Thank you very much.